dropping the kids off at school. So yeah, if you have any, Daniel Castillo, you have any questions, anything from the Instagram live, I can answer anything about WSO specifically, anything about career, anything about the specifics. I think there's been some really interesting trends over the last weeks, especially around the survey that was released from Goldman. You saw a lot of banks kind of trying to either say, "Oh, well, we treat our analysts and junior bankers well." So, and I think Credit Suisse decided to actually pay a bonus of $20,000 randomly to all their junior bankers, VP and below, which was kind of interesting. Let's see. Canton Sherman asks, any plans to develop a program as a subset of the real estate program modeling course for specifically development? Canton, that's a great question. I think it would be an awesome either separate course around specifically real estate modeling, real estate development, if we actually had a development module within it, or we actually just built out an entire course. If you know somebody that's actually really good for that, you think would be a good instructor for that, please send them my way. Yeah, so you're going to go work at a developer and you want to know how to do the modeling for that and the specifics. Absolutely. I think that's something that there's a ton on the acquisition side in terms of courses out there, Wall Street Oasis being one of them. There's a lot less on the development side. And I think the cool part about the WSO real estate forum and real estate sub-community is there's actually a lot of developers in there. So I think we should just go on there and ask them who they think would be best for that. So what else we got here? Somebody asked me, what do you think about completing the 3 CFA levels? So I think the CFA can be valuable. It depends on the type of career you want to build. I think if you're coming from a complete non-target school, maybe a liberal arts background, the CFA can show kind of some sort of competency within finance, but it shouldn't be done if you're trying to target front office investment banking, for example. I think it's mostly a waste of time for that since you don't need it per se. But that's it. Yeah. Let's see here. Julian Bennett asks, can you talk generally about culture at Rothschild and how you have seen banking finance culture change since your time in the industry? Well, Julian, it's been a super long time since I've been in the industry, so it's kind of tough. In terms of culture and kind of what's happened, I usually say WSO is a pretty good place to check on that because we have all this data here. So I'm going to just pull up the company database. Actually, you know what I'll do? I'll pull up the company database, and then maybe we can look at different reports and stuff like that. Where could I go? I could go to investment banking report 2021 here, and that might give us a little bit of a idea of where things are headed. So here's compensation. So a lot of people like to look at this because it shows the pay across the different banks, but that question was about culture. So I kind of would rather go to company reviews and start digging into trends specifically because we have, data points from 2021, 2020, 19, 18, 17, all the way back through 2011, I believe. So you can definitely get a lot of trend data here, which is helpful. And this is, I think there's over 100,000 submissions now through the WSO company database. So while it's not perfect, it is kind of an interesting lens. So this is more interview statistics at the top. So hardest interview versus best interview experience. So you can see Rothschild's in the top 10, however you want to take that in terms of interview experience. But I think what's more interesting, if you scroll down here, you can see stuff like overall employee satisfaction. So since last year, Rothschild's bumped up 2. And in terms of overall employee satisfaction, it's actually had a nice run up. So maybe they're making more efforts there to make things better. But you can dig down even further to things like intern offer rates. If you have 2 internship offers from different banks, you can actually see, okay, where should I go if they're somewhat equivalent in terms of reputation? Where should I go to get to make sure that I land that full-time offer, or it's more likely that I land that full-time offer? Career advancement opportunities is there on the left. And these, again, are all just basically averages based on the number of actually submissions that are put into the database. So like, for example, if there's a tiny little boutique bank that only has like 5 submissions, it's not going to be ranking all the way at the top, because we use Boolean statistics. So basically what that means is, let's say the average for that bank, let's say it has 5 5-star rankings, we still pull it back down closer to the average because it's not statistically significant as much. So whereas if you have like an Evercore that has like a 4.9, but it has hundreds of submissions, it's obviously a lot more statistically significant. So that's kind of how we deal with different varying numbers of submissions, because I know a lot of people ask that question. Feedback, promotion. So there's a ton of data here, and I think you can see a lot of it for free. You don't need to pay for the WSO Premium. You can just go in, and I think a lot of them are exposed there. Maybe like the top 50 are exposed for free. We even have university statistics, diversity stats, stuff like that. Let's see what else I can answer here. Let me pull back here we go. Hey, Patrick, I'm thinking of moving groups with DCM, LevFin, and MA being potential options. How would you evaluate which group is best? And you're thinking of moving into private equity in the future too. So in terms of how I'd evaluate that, I'd see it depends what bank you're at. So if I would say most likely M&A is going to give you the best chance of transitioning to private equity. But that's assuming there's some deal flow in the M&A group. So if you have a lot more deal flow in DCM and LevFin, then I'd tell you to go there. LevFin probably being second. So I'd probably go M&A, LevFin, then DCM. But M&A, if you can get deals done and understand the M&A process, that's going to give you the best kind of set of transactions to talk about in the private equity recruiting process. So I would definitely focus there. Let's see here. Tim Ko asks, hey Patrick, international student from Taiwan, recently got admitted to the MSF in the US. Tim, what's your thoughts? What's your question? Congrats on getting admitted. Let's see here. Jimmy Ritz asks, any plans to add in a separate forum for corporate banking? A lot of threads get lost with all the IB activity. Hey Jimmy, currently it's tough to add more forums when the community struggles to get threads into the right place already, and my small team struggles to keep up with all the content coming in. So I think if we saw a lot, we did add the real estate forum only about 6 years ago. Only, I say, it's it was somewhat of a later edition, and that did really well. So I'm if you want to send me an email with kind of specifics of where you're seeing a ton of corporate banking threads getting lost, that would be great. I'm looking down. David Abovian asked, I'm finishing up a spring private equity internship. Is it possible to convert that into an IB internship as a freshman? David, it doesn't hurt to try. I mean, probably not likely. But the good news is you already have a private equity internship so young, so you're heading down the right track. I mean, I think the key is just to stay busy, and if you do that and you actually, if you stay busy and you actually get those internships and stack them, but by your sophomore year you have a very good shot, even from a non-target if you're networking heavily and stuff like that. So don't feel like if you don't get something your freshman summer that all is lost. I think getting anything freshman summer that's somewhat related is actually a very good first step. Let's see what else we got here. Sorry, I'm a little bit behind. Chris asked a great question. He said, I'm considering joining a family private equity office. What kind of things should I look out for there? Well, Chris, family offices are all so different, so it's very important that you try to get a sense of where they view their allocation to private equity investments long term. Have they been investing in private equity for 1 year, 5 years, 20 years? I think that's really important because family offices can change direction. And there could be something where they have a they have 5 investment professionals in private equity, maybe there's a couple of deals go wrong, and then suddenly there's no private equity arm of the family office because they're frustrated with it if there's like a bad deal. So I've heard stories like that, but I've also heard family offices can be a great place if you find the right family that kind of gives you the mandate to do great deals. So yeah, in terms of consideration, it can be a great lifestyle business, a great lifestyle in the sense of there's not people kind of hovering over you. There's no need to do any of the fundraising aspects of private equity, which is kind of nice if you like just working with companies and doing deals. The pay, when you talk about pay at family offices, you can get paid extremely well. However, there's no distinct fund structure, right? So it's just the family's money that's typically being put to work. So if there's no distinct fund structure, meaning the typical GP-LP relationship, there's really no carry. So as you get more senior, the struggle with that is, even if they're paying you, let's say you're really good and you're doing great deals, yeah, you could make 200, 300, 500,000, even more, close to $1 million. But you look at the people who are really, really good that are at these funds that are either, the first employee getting a bunch of carry, that's really where you get the outsized returns as being in private equity. So it kind of depends where you see yourself long term. It can be a really cushy, really exciting type of job because you get to look at a lot of potentially different opportunities than, let's say, if you're at a private equity or growth equity shop that only looks at TMT, for example. Family offices tend to be a lot more opportunistic, although nowadays there's a lot of generalist private equity funds as well. So it kind of depends. I would just try to get comfortable. I would try to get comfortable that they are serious about private equity investing and have enough capital allocated there. Like, are you the first private equity hire? Would make me a lot more nervous versus if you're like going in and there's already 2 or 3 other investment professionals that are dealing with those, or even better, maybe a team of 5 or 10. But yeah, it could be a great place to get more deal reps, and even hide out if for whatever reason you weren't able to get a job in a pure play LPGP fund. Let's see what else we got here on Instagram or YouTube. Here we go. Let's see here. Let's see here. Sorry. Someone asked Indiana or Fordham. I think both you can break in from anywhere. I think just because of the proximity to New York, being in New York, I would give a slight edge to Fordham just because I have a mentee at Fordham and she's done an amazing job. If you could look at Monkey to Millions, Grace is at Fordham and she's gotten a ton of offers. And obviously she was super prepped. But the proximity of being right in New York, obviously it was less of an advantage this past year with COVID, but I think once people kind of start heading back into the offices this summer, I think it's going to be a big advantage being there right in the city because you can just grab coffee with everybody and meeting face to face. I still think is pretty powerful. Boston Hardo asks, Patrick, tell the story of when you were a Boston Hardo. Oh my gosh, I love it. You guys crack me up. Well, let's see what else we got here on YouTube. Moose says, I got a treasury analyst offer at a private equity fund of funds. Company said that internal mobility is great. Possible to move to a portfolio associate after a couple of years. Hey, Moose. So it kind of depends what you want to do. Treasury analyst, I'm not sure what exactly that does at a fund of funds. But if the internal mobility and upward mobility is to go from that to a portfolio associate. Portfolio associate, I'm guessing, is you're actually analyzing some of the returns from the funds. Just know what a fund of funds is before. You can make great money and it's a great career. Just know that it doesn't translate necessarily to other investing type roles because you're looking at the funds. You're not looking at investments at the investment level. You're often just looking at fund returns and trying to back into whether a fund has a unique selling proposition or investment strategy. So it's a lot more looking at the management, the track records, all of that, rather than looking at specific deals they've done. I know they do look at specific deals they've done, but it's typically not very granular. You're not looking at like diligence streams and all that stuff. It's more like, okay, how did they do with XYZ deal? So just keep that in mind. If like your goal is to be an investor one day, that's not necessarily the right step to take if you want to go there. And so I'm not sure what your question is. You said, is it possible to move to portfolio associate after a couple of years? I would maybe ask them that question before accepting, rather than asking me, because it really is firm specific. So have other, and then maybe you can look on LinkedIn, have other people who've started as a treasury analyst actually ever moved into a portfolio associate role if that's your goal. Usually if you have an offer, guys, if you ask the question nicely, it typically is not going to blow up your offer, especially if you ask a bunch of questions like, well, how much is the pay? What's this? Is it internally promoted? Can you do, yeah, then you're basically, you're running the risk of pissing them off. If you're like, oh no, can you double my pay? Can you do this? Then yeah, you got to be careful. But if you ask a few questions nicely and you do it in a diplomatic way, meaning, humble, and you ask them in such a way that doesn't offend, I think that's a perfectly valid question to ask. Is, they said internal mobility is great, but what does that mean specifically? Does that mean moving to a portfolio associate role or not? So, okay, so Alex L asks, hey Pat, he said, hey Patrick, hope you're doing well. Currently in a LevFin team in an international bank. I wonder if an MBA is necessary for me to break into a bulge bracket LevFin credit funds. Or either bulge bracket LevFin or credit funds. My dream is to land in distressed debt investing. So Alex, if you're at an international bank, it sounds like it's an international bank, but maybe not a bulge bracket bank. I don't necessarily think an MBA is necessary for you to break into a bulge bracket, LevFin, or credit funds. I'd say before going and getting your MBA, I would exhaust. Okay, think of how much an MBA costs, both in opportunity costs and everything. And I have an MBA, so this is me telling you, there's no reason to go get an MBA until you've exhausted the other options. If you know already what you want, and it's not a huge pivot for you. You're saying, could I get from one LevFin team at an international bank to another LevFin team at a bulge bracket? Absolutely. That's done all the time. That's just a typical lateral move. Yeah, so you're at like a Mizuho, HSBC type bank. Yeah, there's no reason why you can't make that lateral move. It's just a question of, making sure you're interviewing well. I think it's going to be much easier to go LevFin to LevFin from the international bank to a bulge bracket if that's going to make you feel better. I just don't know if that having the bulge bracket name is going to be necessarily great for you if long term your dream is to land in distressed debt investing. I'd say rather than jumping to the bulge bracket and have that intermediate step, I'd like you to focus on moving to a credit fund and start building your network out. Anybody who's investing in distressed debt. So that means compiling just a massive list of anybody who does distressed debt investing, figuring out not just people who worked there in the past, people who, and then even before you do that, make sure you can talk the talk and walk the walk. So that means, you probably saw some of this in the LevFin in the analysis you're doing, but actually maybe put some pitches together in terms of actual types of investment ideas, Alex, that you would have kind of going into this specific fund. So I think it's important you do as much research specifically on the funds you're targeting, and then try to look at former employees, current employees, and then just start networking around them, not necessarily directly at them right away, until you kind of get a better feel for the whole landscape. And then once you have a great feel for the landscape and you've talked to a lot of people, you can share that with these networking calls you have with specifically you have with these kind of top credit funds. Now, if you find that after doing all of that, you're hitting a wall because you're not at a bulge bracket bank, I think that's when you start looking, opening it up to potentially lateraling to a bulge bracket bank. But I wouldn't jump MBA yet. I would say give it a good 6 months of heavy work, meaning, if you're working 50 hours, try to put in at least 10 to 15 hours a week of just calls and coffee chats and information sessions as much as you can to really get a feel of what it would take to kind of to jump there, rather than being like, I'm just going to go get an MBA and that's going to take care of my problems. It doesn't. You still have to do all that legwork when you're getting the MBA. It's just kind of a stamp of approval. Matthew asks here on YouTube, he says, what are some of the tips for lateraling externally into another group? Internally, maybe a bit easier since you're already in the firm network and can message on the internal system, etc. Thank you. Matthew, I think internally can actually be almost tougher, believe it or not, because there can be politics at play where, let's say, your MD doesn't want to let you go. And if the deal flow at your current group is really strong, then that can they can try to hold on to you and make it a little bit harder for you. It depends on the firm and how supportive they are about internal moves. But in terms of tips for lateraling externally into another group, the most important thing is that you're just talking to people at your level and slightly above, maybe at other banks, as much as possible. Not when you're just looking for the job, but also just before, just to talk about like potential opportunities that are coming up, because you're not going to hear a lot of these lateral roles are never actually posted on anywhere, WSO job board or any other job board. They're never there. They typically just get filled with people who know people who are looking to make a lateral move. So it's important that you're just being active with your networking and active with just people you're talking to. So if there's specifically other groups that interest you, I'd start to just try and develop as many relationships as you can and staying in touch with those people every few months. Keeping them up to date on what you're up to, stuff like that. Let's see what we got here on Insta. Okay, here we go. Somebody asked me, do you know what is the second most important hub in the world for investment funds industry? I'm not sure. Maybe London? Somebody asked, would you recommend your kids go into banking? That's a great question. Totally depends on the kid. I think it totally depends on the kid. So I think, is investment banking a great place to start a career and potentially leverage that into a long career in finance? Absolutely. Does it take a lot of sacrifice? Is it tough? Yes. So for my own kids, I don't know yet if I'd recommend investment banking because I don't really know how they're dealing. They're too young to really know their personality types. But let's say I have a very driven, self-motivated kid who wants to kind of go that path and understands what it involves, then yeah, I'd encourage them and I'd support them, but with the caveat of if it gets to be too much for you, you can always leave and it's not the end of the world. And I think it's important that people realize the first job out of school is very unlikely to make or break you. Over the long run, your careers can be 30, 40, 50 years. You're most likely not going to be in investment banking after your first job out of school, so you don't need to be stressing out about whether you get into banking or not. What's a lot more important are the relationships you build over time and how that opens doors and the skills that you build over time. So yes, IB gives you an incredible boot camp to rapidly ramp up on those skills, and it gives you a lot of great exit opportunities. But there's other places you can reset, whether it's an MBA or whether it's just doing the own self-studying and showing that you have the skills. So for example, Alex was just asking about distressed debt investing. He's at a Lev Fin group at let's say a bank that doesn't have a super great brand name. Well, he's already at least developing the right skills. He's at least in credit already, so he's in that space. There's nothing to say that if he worked hard for a couple of years building out that network, actually honing his skills as a distressed debt investor, specifically trying to make investments and practice, that he wouldn't be able to kind of start showing those chops to his network that actually worked there, and then they might actually get interested if he's good. And let me get a little coffee here. Okay, here we go. Ahmed asks, I have just about landed a sophomore summer internship at a very small PE firm. I want to land an upper middle market or middle market IB internship for junior year summer. Can mastering a course such as WSO Elite Modeling Pack give me an advantage coming from a semi-target? Ahmed, congrats on the sophomore summer. That's great to have the private equity internship. In terms of financial modeling training, the WSO Elite Modeling Package, can it give you an advantage coming from a semi-target? I think where it gives you an advantage is more. So you say you come from a semi-target. It depends. If you're like not a finance major, yes, I think it could definitely give you an advantage because you're able to get those keywords onto your resume like DCF modeling, valuation, precedent transactions, trading comps, M&A, LBO. So you get a lot of the in the self-study section on your resume. You can actually feature that, and so it will help your resume, number one, clear a lot of the screens. And number two, you can put something along the lines of like self-study for over 100 hours for these specific topics. And I think that can, it's not gonna like get you the interview, but I think it can help in the sense of, number one, it'll probably make you better in interviews if you actually do take like the DC, especially the DCF modeling course, the valuation course, because you're gonna be able to understand valuation at a much deeper level rather than it just being, something you memorize from an interview course. So yeah, in that sense, I think it could help you, but I don't think it's going to, it's not going to make or break you. You still got to network. You still got to put in the legwork. It's just something that can help on the margin for sure. Hopefully that's helpful. Let's see. Here we go. I'm looking at YouTube again. Here we go. Good question here from Dhruv Mehta. Hi, Patrick. Sorry if I'm butchering your name. I'm a final year student in Canada who's going to be starting full-time at a Big Four in the deal advisory, the TAS arm. Do you think 1 year is enough to lateral to an IB firm, or should I stay longer? Dhruv, I would say that, Mr. Mehta, I would say that 1 year is plenty if you can get the offers. I think what might be tough, what might look bad is if right when you start your job at the Big Four, you're immediately like networking aggressively and trying to move. What I would suggest is, you're going to be starting there. It sounds like this summer. What I would say is probably best if you build out your relationships, do a great job at the role at the Big Four, get some experience and get some transactions under your belt, and then start recruiting for the lateral role. But in the meantime, it doesn't mean you can't be recruiting informally, meaning building out those networks now, well before you're ever looking to actually jump. Just to let them know that you're interested, long-term in investment banking, and you want to potentially move after a few years. And then, what'll probably happen is if you build up, let's say you do the heavy lifting of the networking and you've reached out to 1,000 people over the next, say, 4 or 5 months, and let's say 200 of them connected with you, and you're able to get on a phone call or meet with 30 to 50 of them. Those 30 to 50 people are really going to be serving as your almost as like your spy team inside all the other all the middle market banks, boutique banks, bulge bracket banks. Are going to serve there. Hopefully you make a good enough impression where they're going to be giving you the inside information of like, oh, actually there's an opening right now. One of our analysts just left. And that's when that's where the advantage of having that network is. And that can make the difference between you getting in a process or not. So I'd say put in the legwork there now. You don't have to stay for a year if the right opportunity opens up, but I wouldn't be pushing heavily until probably year 2. Just so because it can rub people the wrong way if like literally you just started your first job out of school and you're just like, I want to get out and go to IB. Ahmed said, thank you. Yeah, I'm an economics student, so I need the background in DCF modeling. Yeah, Ahmed, I think that would help. I was in economics, liberal arts as well, and I had no clue going into Rothschild. It was brutal. I should have taken a financial modeling training course back. So yeah, I do suggest that if you're liberal arts, have you only taken economics, no accounting, no finance. Let's see here. Chini says, this is again a YouTube question. Is it possible to break into IB without a finance club in undergrad? Also from Queen's University in Canada. So is it possible to recruit in New York? Chini, I'm not too familiar with the H-1Bs. I know it's like a lottery system. I think it's going to be tough to recruit in New York, but you'll have to do more research. There's definitely some stuff online about that. Yeah, you can break an IB without being in a finance club in undergrad, but typically it's important that you show in other areas of your resume that you're interested in finance. So that could be a financial modeling training, as we were just talking to Ahmed about. That could be stock research competitions, something with trading in the markets, something that's finance oriented. Even if you're not part of the finance club, it's not like you have to be part of that club. But I don't know why you wouldn't be. I don't think it's necessarily hard to join the club unless it's like maybe you didn't make it in or something like that. William asks, do you have an example of a self-study section on a resume? Oh, William, I'll try to pull that up next time. Let me see. I don't think I have anything right now. I don't want to take like 10 minutes to pull something up and try to look for it, but you can literally have something like skills. You could say something like Excel modeling, DCF modeling, LBO, M&A valuation, and you can put in parentheses after valuation, maybe trading comps and precedent transactions. And then there you could say, self-study of over 100 hours or 120 hours, whatever, maybe 100 sounds too round, but you could say 100 over 120 hours or something like that, or over 80 hours, whatever you feel comfortable. I would actually do it. So it's not just saying on the resume, because if you put that on your resume, they're going to ask you questions around financial statement modeling and DCF and all that stuff. So you better be ready for it. It's just a way to help you land more interviews and show that especially if you're an econ student, liberal arts major, that type of thing. Here we go. Saeed asks, how do you pivot from a middle market investment banking sophomore summer to a mega fund private equity firm for your junior summer? Well, Saeed, it's important that you get into those recruiting processes. And I don't know what school you go to, but getting into a mega fund private equity firm for your junior summer is incredibly difficult and very unlikely. Now, the fact that you had a sophomore summer internship bodes well, but if you're not already talking to people at those funds and not in the process, I think they're starting now, or at least I know for Grace, she was already interviewed for I think Aries for her junior summer, and she's at Fordham. So yeah, she built out a massive network. I implore all of you guys to do the same. Let's see what else we got. I'll take a few more questions and then we'll wrap it up. Alex says, are you working on improving the Debiso app? It's slow right now and crashes frequently. Alex, thanks so much. We've been investing heavily in it the last few weeks. I'm kind of depressed that you say that it's still slow and and crashing frequently. I'd love for you to send me an email, patrick@wallstreetoasis.com, just detailing where you're having issues. Is it iOS? Is it Android? Stuff like that would be great. It'd be a huge help to us. Even if you could record your screen, just so I can send that stuff to the developers and let them know. We are trying to make it better. It will get better. We promise. Things are getting better because I can see the traffic on the app exploding up and to the right. So that's good news. I know we've fixed some things. We're bringing private messages to the app too over the next, probably in the next week or two. It'll be there. Okay, so Akshay asks, hey, what are the exit ops? This is from Instagram. What are the exit ops from the internal audit at a Big Four look like? Been here for 2 months, first job out of uni. What could I do if I want to eventually do something like banking or consulting? So the path here, Akshay, and you can see this in a lot of the podcasts I've done. If you're in audit, you kind of have to take an intermediate step typically before you can transition to banking or consulting. Usually you need to get some transaction experience, and that means either internally transitioning to transaction advisory services or jumping to another Big Four that will take you into TAS. In order to do that, you typically have to be a top performer in audit. So don't slack on your job just because you're like, oh, I don't want to do this long term. You have to have really good relationships with your bosses internally to be able to do that, and you kind of have to feel it out. It can be a little touchy because a lot of people want to get to TAS for that exact reason, and then you got to be careful because the TAS people don't want to hear that, oh, I want to come to TAS so I can jump to banking, even though a lot of them know that ends up being the path. So yeah, I would just say, since it's your first, you've been there for 2 months, I would definitely put in a year there. But also, like the advice I gave to everybody else is start actually building out the network internally and externally at other big fours in TAS. And start building out the network at investment banks if that's what you want to do eventually long term. You never know. I've heard of investment banks taking on somebody from the big four in audit straight before even having TAS. So if they feel like you're really strong with accounting and you can maybe do some sort of self-study and show financial modeling acumen, then there's nothing to say that it wouldn't work. Let's see. Here we go. Tim asks, when will these modeling packages expire? I'm not sure what that. I think is the question. If you purchase a modeling package, do they expire? They're lifetime access when you purchase. The only thing that's not lifetime is the access to the bonuses of the access to the company database and the video library. But the courses themselves are lifetime. If you're asking about the courses here that I have on my screen for the YouTube audience. Any tips on starting a student-run VC fund at my university, especially with raising funds? Hey, Logan, a lot of people make fun of the student-run VC funds. Actually, it's good if you're want to go VC or be an investor long-term. Just don't oversell it on your resume. Tips on actually starting a student-run VC. You know better than me. I never did one, and never when I was in school. So I would just look, search in the forum, see if people have advice. So Saeed, yeah, I see you're at a target in the middle market investment bank is for next summer. I'd be a sophomore then have accepted. So yeah, you're in a good position, Saeed. It's still going to be tough. So I would just keep networking and try to figure out when you're going to be getting in, when those processes are going to happen. But yeah, you just got to keep putting in the legwork. Either way, you're in a good seat. Even if it sounds like you want to skip the investment banking analyst program and just go straight to mega fund. Good luck to you. I believe in you. So let me see here. What else we got? I'm looking at Instagram now. I feel like I've been. Do you know any cybersecurity? Sorry, Jeremy. I don't know much about cyber security stuff. Alex asks, how does transaction advisory services, TAS, at a big four differ to investment banking M&A? Is it just smaller transactions? Transaction advisory services, typically you're hired by a private equity fund or a bank to help do advisory on it. And yeah, or it can be smaller transactions. It just depends on the group and what big four. But yeah, you are working on specific deals, which is good, which is why it's very transferable skill set. Let's see here. What else can I answer to all of you? Stonk Romemes asks, why are companies so obsessed with the MBA/CFA versus experience? I think it's just because that's what they're comfortable. That's what they've hired in the past, and that's what a lot of the employees themselves have. But I do think that's changing. I think there's a lot less banks requiring an MBA to get promoted. Same with private equity funds. So I think we're seeing a shift there, and I think it's a good shift. I don't think CFA or MBA should be a requirement for all types of roles. But yeah, I don't know. Your guess is as good as mine, man. Let's see what else we have here. And then maybe I'll take a couple more and then we'll call it. So Tim, one thing I would warn you is it says, as an equity derivatives short-term trader in Hong Kong market before, I want to use the MSF as a chance to break into the US job market. What related function position would you think of for this kind of situation? So Tim, I just want to warn you, because a lot of the MSF programs aren't very transparent about international students coming here, and many of them end up having to just go back to their home country because they can't get the visa situation ironed out. So what I'd ask specifically of whatever MSF you're going to go to is not just the job placement rate, but the job placement rate of international students in the U.S. if that's your ultimate goal, because they'll give you these metrics for overall, but oftentimes the kids who are landing those jobs post MSF are actually the kids in the U.S. that are already in the U.S. before that don't need the visa. So here we go. Wes says, I heard going to this is a good question from Wes Bogan on Instagram. I heard going to a below 25 ranked school for the MBA is not worth it. True? Is it a question mark? Wes, this depends a little bit on if you're like a career changer and MBA makes like really good sense. So let's say you go, I'll give you two examples. Let's say you're in investment banking at a middle market shop and you like really desperately want to go to like a bulge bracket bank for some reason as an associate. An MBA could definitely be worth it if you can get into like a top 10, say 15, because those really feed heavily into the banks. When you start going outside of that, I'd say top 10, top 15, the feeders into banking, into front office investment banking, it's much more hit or miss. So you got to be careful. I would say it's definitely, as you go past that top 10, top 15 MBA rank, the value for if the price is the same and you're not getting financial aid, it definitely becomes much less of a good deal in terms of value for your money and the payback of that MBA. So it depends. Let's say you're a career switcher though. Let's say you're in marketing. Here's a good example. Let's say you're in marketing at XYZ marketing firm and you get into like, I don't know, a 15th ranked MBA or a 25th ranked MBA school. I don't even know what that would be. And you know what you want. Let's say you know investment banking is what you want. If that's the only MBA program you could get into, but you're driven and you know how to leverage the network of the MBA program for the people who are there, and you go in and you learn what you need to learn, then absolutely, I think it could be worth it. But it also depends on like how much you're earning pre-MBA, because you have that opportunity cost, how much the MBA is going to cost you, because if it's a really expensive MBA program, you're losing 2 years of earning, and then there's no even guarantee that you get into the career you want. It's a very tough decision. So that really becomes borderline. So yeah, you said you're in a career switch. So career switchers, if you're being realistic, so for example, investment banking is a great place to get in from MBA if that's what you want and you don't have that background to do it prior, because you just have no finance accounting background. Let's say you're a little bit older and you've always been in marketing and you need that reset. MBA can be great. And I would say outside the top 25, yes, it becomes a harder sell because you're not going to have those paved channels to the investment banks. Whereas if you're at say like a Cornell or a Wharton or a even a Darden or a Duke Fuqua or something like that, where those have pretty good feeders into banks, I think it's going to get harder. Good question from Raj. He says, how do we continue the conversation with people we've recently networked with? This is can be super awkward, right? Where people feel like they have to reach out to you every few weeks or every month to give an update. I think if you, let's say you talk to Raj, let's say that person is a Patriots fan or a Celtics fan and you happen to love basketball or football like them, I think it would be fine if every 3 to 6 months you say something about that and you give them an update on where you are. I wouldn't be doing something every month or so. I would try to save it when there's something actually noteworthy about, like, let's say you got a new internship and you want to thank them again for their advice, or you good news basically. Oh, I got this, or I have an interview here. Any thoughts on that? Or if you could, even better, if you can give them some help. So for example, let's say someone was networking with me and they were like, oh, and actually, Patrick, I noticed X, Y, and Z on the mobile app, for example. Like somebody said today, oh, the mobile app's a disaster, blah, blah, blah. here I recorded this video for you in terms of what it is. Here are the details. Hopefully that's helpful for your developers. Like that would show me, oh, that's actually useful. I can just forward that email off to my developers and hopefully they'll take care of it. So it's just good. But like, let's say there's somebody else in a specific area of finance where you're trying to help them. You can actually, say something, oh, I saw this deal that you were on, congratulations, something like that. So just finding opportunities to check in every 3 to 6 months, I think is sufficient. Maybe increasing it or sending something out to everybody once there's something noteworthy that happened great to you or happened great to them, I think would be great. And you can set up Google alerts for this stuff. So if, let's say you've had a couple great, 20 great conversations with 20 separate people, you can't keep track of all this stuff. But what if you put in alerts for the companies they work at and for their names specifically? So if they're mentioned in the news and or their company just had something super noteworthy, and maybe they even worked on a deal that was noteworthy, that's a great time to reach out. As long as it's not overdone, meaning you're reaching out every month and just hounding them and whatnot. And as long as it feels genuine. That's all I'd say. Let's see here. Somebody asked, W. Jenkins said, I went to a non-target school with a degree in finance. Is getting a master's of finance at a top 25 school worth it? So top 25 school is super vague because master's in finance is a pretty new degree. So you got to be careful. You want to see the placement statistics. There was a user on WSO, or there's a site called MSF HQ, MSF headquarters, if you haven't already seen it, that kind of gives a rundown of different programs. But any school you're going to go to for this, and you're going to put that much money into it, it's imperative that you look at the placement statistics and you don't make sure you're not sugarcoating or becoming delusional about what that MSF is going to do for you. Because really, it's a short program. It's one where you basically need to know what you're doing and be recruiting before going into it. If you already have a degree in finance and let's say your GPA is decent, I would say you're probably better off networking, building your skill set up like that. And if that, after 6 months of really pressing hard on that, is still yielding nothing, then you might want to look into an MSF. But I wouldn't say top 25. I think for MSF, I'd say top 5 there, because top 25, you're getting a lot of MSF programs that have very bad placement statistics, or it's a completely new program. And I wouldn't tell anybody to kind of risk that much money on something that's so new. So I think that's it for this week, guys. It's been almost an hour, so I'm gonna call it. But thanks for joining me. I'll be back on next Tuesday at the same time, 12:30 Eastern, 9:30 a.m. Pacific. Hopefully, I'll see you then. Thanks so much, everybody.